Welcome to another Stage Analysis members video. It is Thursday the 22nd of September, so a day later than I normally do the midweek video. So obviously we had the Fed meeting yesterday, which shook up the markets a fair bit. So I thought I'd give it a day to see what the initial reaction was and see if there was anything interesting coming out of it. So I'm going to start tonight's video by going through the major indexes. I'm going to look at what's going on in the sectors. I did a post earlier in the week with the 30 leading stocks per group in terms of their using the relative strength. See what's happened with them since the meeting this week, how they've reacted. And then there was a few watch list stocks today, but again, not many as the price action was very low. It's been a very, very low week in terms of stocks for the watch list. The scans have been very, very light, and obviously there's been negative action for multiple days, so not a lot coming up at the moment. So I'll highlight a few of there was a couple of stage 2 breakouts today against the market action. So starting off tonight with the S&P 500. So it wasn't actually a huge day. It's a very, very tame day compared to what we've seen following past Fed meetings. We had the initial reaction yesterday after the Fed meeting, which was really strong in the final few hours. Obviously chopped around intraday really violently. But today we were mostly in a very tight range. If I zoom in on the intraday on this, you can see we actually spent the majority of the day in a very, very close range, popped up at the end of the day, but then strong reversal in the final half an hour, when the 15 minutes even, with the large players dumping heavily, actually taking out the majority of the day's price action in a very short amount of time. So supply remains in control. There's not much in the way of a bounce attempt there. I did a post earlier on today saying, will we get a spring, or obviously stage 4 continuation attempts potentially. It looks like supply remains in control at the moment. We're still below this -2 ATR level here, and approaching the -3 ATR level. So we're getting down into the bottom end of the ATR bounds, and we're been in a strong downtrend since we started breaking back below the 21-day back at this point. I think it was around the 19th of August here. And then obviously with the significant reversal bar continuation, which we continued lower ever since. So we've been below this -1 ATR band since then, basically. We've had that brief pop up at the start of September. So at the moment we're testing the bottom end of the range here. You can see the horizontal range we've been going through for the last 4 months or so. As I've said before, we had the shakeout attempt and the test, and then we had that good rally through July into August. It tested the 200-day moving average, formed an up thrust and a lower high, and then has fallen back down. We've been going in a downtrend since. So we've had a month in a short-term downtrend, but we've been in a 4-month sideways range. So we potentially, as I said before, moved into stage 1 territory. If we look at it on the weekly chart, wrong chart now, we've got changed. On the weekly chart, you can see that we had that change of behavior that we've talked about before, which potentially moved us into stage 1 behavior. We haven't yet broken the lower end of the range here. So at the moment we've got an initial stage 1 range, but we have started to fall below. We made an initial swing low in here and started to fall below that. So potentially we could be starting to move back into stage 4 territory. We've certainly seen it in the market breadth post that I've been doing at the weekend. From the weekend post, you can see the percentage of stocks above their various moving averages move back into stage 4 territory. The IBD industry groups bell curve move back into stage 4 territory, and multiple other breadth indicators that we watch has been in negative signals. So we are potentially, the stage 1 could potentially be failing, and we could be moving. We could potentially make a stage 4 continuation breakdown. But at the moment, as I said, we're still above this May high low here. So you see we made early June, sorry, not May, and we haven't yet broken below that. So potentially we could still be in stage 1. We could just be testing the lower end of the range. So it's a difficult one to call at the moment. If you push on into other areas of the market, so this is the Nasdaq composite. You can see similar behavior. We had that shakeout, higher low test, made an up thrust, didn't quite move up to the 200-day moving average, lower high, significant reversal bar back into the range, and then we've been in a downtrend ever since, again below that 21-day moving average. We'll put the ATR bands on this. You can see again we're close to testing the -3 ATR level, so we're below the -2 ATR level, so we're in a strong short-term downtrend at the moment, below the 50 and the 21-day moving average, and a long way below that 200-day, which need to rally by 17% to get back up to the 200-day. And you can see the relative strength line is well below the zero line here. We've got a long way to go to get back to there as well. Same with the Russell 2000, again 21 days below the 50-day, and the 200 had showed some better relative strength compared to the Nasdaq, so it's only got 12 to 13% to get back up to the 200-day. But again, it's in this lower range base structure, same behavior that we saw in the S&P 500 and the Nasdaq. So in a short-term downtrend. Again, if we get the ATR candles on here, again, close to touching that -3 ATR level and below the -2 ATR level. Better performance versus the S&P 500 zero line there. You can see it's been trading fairly in line with the S&P 500 since August, but still underperforming slightly below the zero line here. Look at some areas that have actually shown more relative weakness. Like you've got the IBD 50 here, which is actually making new lows, continuing with a stage 4 continuation breakdown here. Never made it up to the 30-week moving average here. This, unlike the rest of the market indexes, you can see this didn't really have a change of behavior compared to previous upswings. So at the moment, this one remains in stage 4, making new lows strongly below its zero line here compared to the S&P 500. ARKK, this was obviously a major one back in 2020. We've followed it all through the stages, had that weak stage 3 top, broken down into stage 4 in late 2021, and has had a deep stage 4 decline. So from the high, this one's off a long way, 78% or so, and currently from the highs up there, it's still down 75%. So massive decline in this. We did see a change of behavior low in this one compared to previous swings here. We got that broadening formation, started to show stage 1 type behavior in this. So at the moment, you can see from if we mark out some levels here, we've got the lows. It's still forming a potential base structure here, still potentially could be forming a stage 1 base structure, but you can see the 10-week moving average is still below that declining 30-week zero line. It's still a ways off compared to the S&P 500, so still underperforming, still got a lot of work to do. So this one would need to have a big move back above the 55 level at least, and for the 10-week moving average to get above the 30-week, and the 30-week to start turning up in order for this to attempt to move back towards stage 2 territory. At the moment, I'd still mark this as potentially in stage 1, in early stage 1. But it could well, again, same as we've seen with the IBD 50 there, it could make a stage 4 continuation breakdown, as it is looking weak at the moment here. So we'll see how that one continues to develop too. The VIX back above the 200-day, as I mentioned in the weekend video, holding above that at the moment. Haven't tested the 200-day since, so still up at high volatility levels while the price action is still within this lower range here. So still got a ways to go. We need to get this needs to come back down into this kind of area to get back towards more positive environment again. So at the moment we remain in that difficult environment that I talked about in the weekend video in the market prep segment. We look at the